Warren, I mean, we were discussing off air just before we started about how, local markets have pretty much done nothing in almost 3 years, you were saying?
Yeah. So basically since July 2014, we've had a little bit of a rally now in the last month or so, but basically since July 2014, quite disappointing returns on the market. And I mean, what we were chatting about earlier is the investment case has almost been quite binary. You're either in South African investments or you rand hedge.
Mm-hmm. And the thing is, like right now, in terms of, we've seen sort of more activity on the rand, and I take it back from December where we saw huge gains, and now it looks like we are unwinding some of those gains. So let's talk a little bit about the rand and where it's headed.
Sure. So, I mean, it is an interesting one at this stage. And I mean, for the last 2 years, the rand has been one of the most volatile currencies in the world. And over the last few months, we're starting to see some stabilization coming through, which is a bit of a welcome relief for anyone trying to plan into the future.
Sure.
But what we have seen is most of the good news would appear to be priced into the rand. And, we've had the Moody's rating decisions. We've basically got some stability from policy changes and that coming forward. There's a bit more confidence coming in on the business side. So that is all good for the rand and a strengthening for the rand. That's now priced into the market. What we've also seen is interest rate cut, which is actually negative for the rand, just because it's less competitive putting money in South Africa compared to internationally if our interest rates get lower. Mm-hmm. So I think at this stage, the rand is probably fairly priced. And I mean, if you look at your purchasing power parity, and we've got some analysis going back to 1994 today, just looking at the inflation difference between America here, mm-hmm. the UK here, and we're pretty much in line with where we think the rand should be. Probably 11.50, 12.50. That's the right range for us to be operating. Going forward, though, the better things are for South Africa. Yes, we're going to get foreign flows coming in as investors get excited to be here. But at the same time, as South African consumers do better, we're going to want more stuff. We're going to start spending more money. And that likely means we're going to start importing a bit more. And as we import more, that's negative for our trade deficit. And that would likely mean a bit of rand weakness going forward. Mm-hmm. On top of that, if America starts hiking their interest rates, we're going to try and keep ours low for a bit longer. So we think we probably see flat interest rates locally for the rest of the year. Mm-hmm. But if the rest of the world's hiking, that means that's a negative factor for the rand. So we wouldn't be looking for a blowout in the rand, but we'd look for gradual weakness during the course of the year.
All right, so when you're talking about flat interest rates, so we saw a cut this time around, and Nedbank is not expecting any more cuts this year?
So it would be awfully tempting and attractive to cut rates. And I think, if we see that the US Federal Reserve is more aggressive with hiking their interest mm-hmm. rates, it's going to make it very difficult for us to be cutting rates while the rest of the world is hiking. Mm-hmm. And just from the point of view, if we keep cutting rates while everyone else is hiking, we're going to get rand weakness. And that rand weakness would result in imported inflation, which would then force the hand of the Reserve Bank to start upping rates again. Mm-hmm. Now, you don't necessarily want rates bouncing up and down. So we'd be of the view that we've had another another 0.25% cut. That puts prime at 10. And we'd expect, unless there's less hiking internationally, we'll probably hold that level for the rest of the year.
I mean, going back to the volatility, or maybe a not so volatile rand that we're talking about right now, I did see a headline from one of the media houses talking about the rand potentially being a safe haven asset, particularly in the emerging markets complex. And it's quite remarkable to think of the rand as a safe haven.
Yeah. So, yeah, I mean, it's probably quite a loose definition of safe haven. Right. but if you look at what's happened over the last 2.5 years, and like I mentioned earlier, the rand has without question been one of the most volatile currencies in the world. We're entering a period of stability right now, and now you're looking at sanctions against Russia, potential trade wars. So our other emerging market counterparts, not that we excluded from that, but they're now starting to feel a bit more of the volatility that we've been going through for the last 2 years. So the reason there's perceived stability in the rand is a lot of our dirty laundry, so to speak, has already been aired. Mm-hmm. We've had a shake-up in our currency, and we've now seen the recovery on that over the last 6 months or so. So from that point of view, there's relative stability in the rand at this stage.
Mm-hmm. And not to ignore how the rand performs against the other crosses, because right now I assume we're talking about dollar rand specifically. But what about our outlook against the pound, particularly because they are not going through the most smoothest of transitions out of Brexit, are they?
Definitely not a smooth transition, and a lot of question marks on what the future of British growth looks like. And obviously that will translate into potential pound weakness, or if it goes well, pound strength. So, I mean, that same parity example I was talking about earlier, just looking at the inflation differentials. Again, the rand probably 16, 67, somewhere around there. That's probably the right number against the pound. So we're pretty much in the ballpark on that one. I think the question mark going forward is, are we going to be seeing further pound weakness, which is, relative to the rand would be strong, or are we actually going to see some traction? And, again, the bad news is out in terms of Brexit, and they can start rebuilding. So I think, I wouldn't be a betting man on that one. I think the jury's still out in terms of how Brexit is going to impact them. So at this stage, I'd say we're relatively well priced against the pound, but I wouldn't be convinced either way.